Hello everyone, this is Dan Gramza and welcome to dangramza.com Market Studies for Monday, September 25th. What an interesting day on Friday. It does give us some ideas about how the market's positioning itself going into the weekend, as we talked about in the advanced video. But let's pick one of these indices, and here I have the Russell. This is what I call a false sense of security. If you're on the short side, Monday and Tuesday of next week could be critical. Nothing telling us to be a buyer at this current level, but be on guard if you're on the short side. I feel the same way about the Swissy. Right now, we see sellers closing it out on Monday or Friday, but on Monday we could easily go sideways. Oh, let me tell you about the Australian dollar, just to give you some references. For those of you not familiar with this, the green line represents a buy level, red line represents a sell level, a dashed line means it's something that happened earlier in the week. So, in our friend, the Aussie dollar, this difference between this buy level to that sell level is $290 a contract. This does imply a move to the upside, but it's what I call a neutral zone trade. Sideways move I think is more logical. British pound from that sell level to this buy level, that was $375 a contract. Be cautious here if you're on the short side. Canadian dollar from this buy level to that sell level, to give you that reference, is $960 a contract. That's also in a neutral zone trade. Bitcoin, look for a sideways move. 10-year notes from that sell level to that buy level was $375 a contract. Here, I'd like to see some weakness, a sideways move, but we see buyers coming into that market. Bonds in the same boat, 30-year bonds. The difference between that sell and buy level there is $750 a contract. Over in the gold market, from the buy level here to that sell level, to give you that reference, is $800 a contract. Sideways move here also. We don't have fundamental drivers here, I think, to create a big move in that market. In silver, we had a trade earlier. And again, these are not buy and sell recommendations. These are just ideas that I want to share with you. As you know, or many of you know, you can go back 10 years and watch previous videos if you want to get a feel for what was going on. The difference between that sell to buy level there was $150 a contract. In the copper market, I'd be cautious here on the short side. There is a pent-up demand, but we're not seeing that paper coming into the market. The difference up here between that buy and sell level is $250 a contract. In crude oil, it's a market that I've been talking about for the last few days, that it could be building value at these levels, which does make sense. So I don't look for a big move up on Monday or to the downside. It's what I call a neutral zone trade. The difference between this buy level to that sell level, again, just to give you a reference, if you're not familiar with futures, what the dollar value is in something like that, that's all. But the dollar value for that is $10,090 a contract. To give you that reference again, neutral zone trade. Over in nat gas, this difference between the buy level to that sell level is $400 a contract. Look for a sideways move there. Be careful on the short side, and the same thing holds true for Mr. Bean. We have a possibility of a transition to the upside, but as we talked about in the advanced video, there's a very interesting rhythm in this market. So be cautious if you're trying to be a buyer at these levels. Well, those are my thoughts for today. I hope you found something helpful. Look forward to being with you again on Monday. In the meantime, have a terrific weekend and take care.